Another failed Brexit, and the NBA players love the double standard. What's up, everybody? Welcome aboard to Bubba's Bottom Line for Sunday, October the 20th. It is Sunday, and of course, a lot of things going on. And of course, yesterday, the big Brexit vote that never appeared. Okay, and again, I don't know how that will affect the markets this week. I mean, I do remember trading through the last one, but I don't know how this is going to affect everything. I'm wondering what happened to the hard Brexit. I wonder why Boris Johnson took the vote to the floor, so to speak, if he didn't have the votes. Again, obviously a lot of things going on. I mean, what happened just to the hard Brexit and getting the hell out of there? So we'll see. We'll see how it affects markets overall. I don't know. Again, I don't really have a clue at this moment. I mean, I can't give you an answer of how I think it's going to affect because, the markets are efficient enough. And that might have been the reason for the late day sell-off on Friday, that maybe the markets were getting wind of it. We'll see tonight how it plays out. In the meantime, just another failed attempt at getting out of there. But I think there's a lot of things going on now as some of the ex-CIA analysts and agents start to lawyer up as Barr goes deeper into Russiagate. I think we're going to find out there was a lot of people that were very dirty throughout all those phony investigations, and I think that the dirtiest of all is probably the one who is calling Tulsi Gabbard a Russian. What do they call her? I just lost my train of thought, but a Russian, not a spy, but a property. Whatever the words are, they're having quite the Twitter battle. Of course, our great ex-first lady, who destroyed more young women to keep her husband in office and to keep their mouth shut. Again, there's numbers after numbers after numbers of what she has done. But in the meantime, there she is sitting pretty and having a grand old time. And maybe she'll show up to go into the election now that we've seen what a mess the debates have been and what issues have been brought up and just really how far these people are willing to go with a bunch of bull. I mean, again, I'm not a big fan of either political party, but right now we are focusing on those that have been in this recent debates because it's brutal. Okay, the things they say are brutal. The things they promise are more brutal. And of course, they want to tax the wealthy. Now, do we all know what happens when they tax the wealthy? Okay, do we know what the status is when they do tax the wealthy? Okay, the next is you. Okay, they can start with the wealthy with their usual bull, okay, and say that we want to tax the upper 1%, okay, and then all of a sudden it's the upper 2%. Before you know it, we're all paying the ridiculous tax. Don't we pay enough taxes in this country already? I mean, isn't it enough that maybe they should learn how to quit spending so much and making so many false promises? Maybe they should say that Social Security, the biggest Ponzi scheme ever, okay, the government borrows the money from Social Security and doesn't replace it. And of course, now that people are living much longer, there ain't no money, okay? I mean, obviously, I've paid the maximum for 40 years. Okay, and believe me, the day I'm eligible, I'm taking it. I don't care if I donate it to a charity, but I'm taking it from them. But at the end of the day, shouldn't they just make the retirement age now 80? Okay, shouldn't the retirement age be 1 or 2 years above where the expected lifespan is? So that we at least, if they're going to be allowed to continue to run this Ponzi scheme, that it at least goes past, okay, the average living age, which was the original intention. Okay, when it was originally made. Okay, 65 was 2 years past the average living age. But of course, that would be too hard and they'd lose too many votes, right? And this is the problem with the system on both sides of the aisle. This has nothing to do with the left or right issue. This is, them doing what they do to keep getting their votes. And of course, we go from one Ponzi scheme to the next, which is the Federal Reserve, which is I don't know. I mean, it is the biggest Ponzi scheme ever. Okay, they continue to borrow money, on old debt to pay. They borrow money, print money, pay old debt, and create new debt. I mean, in the meantime, okay, here we are, and they're making all these adjustments, and we have the non-QE, okay, the new bond buying program, which is not a QE program, supposedly, okay, and of course, why are all central banks basically not in a panic, but in an urgent state, okay? Why are we in so urgency to make these ridiculous changes to interest rates, to governments, to all the money standards? I mean, does that not indicate that there's a problem? Now, again, we continue to believe that we are in the very early stages of a recession. And I believe that the ridiculous actions by the Federal Reserve are showing us just that we aren't as strong as we think we are. And we do have troubles coming up. And the banks are not as liquid as they're supposed to be. Okay. Again, I have said this forever, that I don't believe that the banks have the necessary capital in reserve that they're supposed to have. Okay. Now, again, this goes back to when they used to put fake gold. They used to put gold on top of a pile of crap, and it looked like, you got enough to cover the assets. Again, I think that there's a lot of trouble with the banks. I think that they're well over leveraged, as we've said many times. They may not be lending to the average guy on the street, but they're certainly buying as many loans as they can. They're certainly creating the same CDOs and things that they were making. So again, are we going to sit back once again and let this happen throughout the Ponzi scheme? Because all Ponzi schemes eventually collapse. Okay, so, how far do you think the Fed can push it? Now, they finally did get their wish in forcing down the dollar, and we'll talk about that more in the markets. But of course, the dollar did have a disastrous week. Well, disaster is a state of mind, but it did have a pretty rough week. But again, we are now in this stage of, we all get so excited, and we talked about this last earnings season, that companies are beating earnings, okay? But they're beating earnings that are ridiculous. Okay, they're basically can step over the bar and maybe not even have to step to get the bar that's being set for these companies. So as we rah and cheer on that they're not going to have such an earnings disaster as predicted, we're not looking at the numbers. And again, it's like the old sleight of hand deal here. Let's pretend and tell them how well we're doing, and let's show it by lowering the bar so much that, everything's great. We're killing it. Okay. But again, you're starting to see even some subtle changes in the job market. You've got manufacturing slowing. So, now again, but of course, everybody will continue to say, well, but everything is so great. We're not manufacturing anymore. Well, I mean, President Trump built part of his campaign on bringing back manufacturing jobs, which he did. Now they're starting to disappear again. Right? So again, do we continue to say that everything's okay? Do we continue to kick the can down the road? Okay, like they've done for so long. I mean, again, is the growth actually that true? All right. I mean, and not to mention the action in the stock and bond markets now. In theory, stocks and bonds are not supposed to go the same way. Okay, in theory. Okay, if stocks go down, bonds go up. That's why they teach you, okay, which is ridiculous in its own right, but that's why they have a balanced portfolio of bonds to stocks, because if one's going down, the other one should be going up. Well, now they're both in such run-ups, okay, and the bond market has so much more volatility than the stock market. One of them's got to be right. One of them's going to take a tumble. And of course, we would suspect, based on, again, the global recession, based on what the central banks are doing, based on what the Fed is doing, that the next big move will be lower. Okay. Now, again, we're still long. So again, I'm not, and certainly I'm not getting rid of my long-term stuff regardless of what I say here. Okay. Again, my long-term retirement portfolio I'm never getting out of. I hedge it, so it doesn't matter. But the point is that, again, I believe in the overall 8% year-over-year growth for 150 years. So I'm not going to change that now. But in the short term here, it looks like there's, a lot of troubles brewing. Okay. I think that you've got things, are showing that there are many issues. And of course, as we continue to look at what is the situations that are in front of us, okay? And you've got the overall China trade war, which, again, right now, from my understanding, China is buying most of their soybeans from Brazil, okay? It's like 80% from Brazil, 20% from us, which is, of course, we hear the big deal and how good it is, but where's all the orders? And I think the big key that you always look at is to the price action that shows up in the market and not at the words that you hear, okay? Price action determines everything that's going forward. So I think that, you see price show you. It's like they talk about the hog markets and how much, what demand there is and how much record purchases are. Meantime, hogs keep going down. So again, I ask you, okay, does that all make sense? And of course, at the end of the week last week or midweek, the NBA is in China right now. And of course, NBA and Nike, two great partners, okay, that make billions and billions of dollars. And of course, they love to have that double standard because when they're here, they mouth off at what garbage the president is and how he's worried about human rights and doesn't do this and doesn't do that. And they're not going to the White House because he's a piece of garbage and the whole story. But of course, now when a Houston Rockets general manager tweets out something about, about what's going on in Hong Kong and China goes ballistic, okay, and all the NBA players and Nike kowtow backwards, okay. So yes, they want to support communism, a dictatorship, and slavery versus free markets and capitalism in the United States of America, okay. Because why? Because it's for the almighty dollar, right? So again, let's be clear about one thing, okay? People care about money, all right? They're not worried. The NBA players are not worried about their human rights. They love the freedom of speech here where they can mouth like a bunch of jackasses, okay? But they can't stand the fact that they might lose part of their money because because 25% of their revenue comes from a communist dictator country. And the same goes for Nike. But of course, Nike's already proven that they're basically bulletproof at all the crap that they pull because nobody really cares. So again, should we really be worried about what they say? Because here you go. They're showing the great double standard, all in favor of the almighty dollar. This is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out here for a break, and we'll be right back with more of Bubba's Bottom Line. What's up, everybody? Hope you're having a great weekend. And of course, next Saturday, we are doing our last hedging course of 2019. We'll have the webinar up on the site tomorrow, and if you'd like to get it early, you can surely email me at bubba@bubbatrading.com. But tomorrow you can go to bubbatrading.com and go ahead and click on and register, and it's free. I'll talk to you about hedging and how to protect your portfolio. So please feel free to check it out. And of course, don't forget about our high school program. If you'd like to help us out, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me, Todd Bubba Horowitz. Welcome back. It is Bubba's Bottom Line for Sunday, October the 20th. Todd Bubba Horowitz with you. And of course, we had markets that, they really know no tops. It looks like they want to make new highs. Again, they had some fairly reasonable action last week. And, again, volumes are absolutely pathetic. Okay? But it doesn't matter. Again, it comes back down to price. Price is king. So we can talk about how bad the volume is. We can say that it shouldn't happen because of it. But at the end of the day, when the markets close, there's the price. The markets are always right. So never think that you're smarter than the market, because the market is never right. It's absolute. It never gets sick. It never gets tired. It just rolls on. Okay. In the meantime, we are long across the board. We got long on that big spike midweek, and of course, obviously, the late pounding on Friday afternoon was not great. But again, I said earlier, I don't know if that was because of maybe there was some wind, that there was going to be an issue in Brexit for whatever reason. I mean, the Dow was down 224, and I think what was interesting is the big divergence in the markets. The Dow was down by far the most with the NASDAQ. Okay, they were down probably equally. And the Russell and the S&P were not bad at all based on what was going on. So I have to wonder, what was that all about? So, obviously we'll see. It'll play out this week. Obviously the one thing about markets, they open up tonight at 5 o'clock or 6 o'clock Eastern time. Okay, they're going to trade, so we're going to get an idea what the markets are seeing. But in the meantime, we are long. Okay, we're looking. I mean, I personally suspect that we'll test the new highs. I don't think they're going to hold. I personally believe that the longer term here is there's going to be a much bigger meltdown. But again, it doesn't mean that we cannot capitalize from a rally here, which is why we're long, and because that's what the mechanical systems that we use, that's what our algorithm says, is to be long at the moment. So we will continue to remain and keep that position. Oil, crude, continues to chop around. Okay, after going down 10 days in a row, it is now in this balancing consolidation, which only indicates to me that it's going lower. And of course, we would expect to see oil, which we have said since it was in the 60s, we would expect it to be in the 40s at some point. And I think the 40s are coming sooner than later. I think there's a lot of reasons to believe. You can talk about growth, you can talk about the China deal, you can talk about it all, but the bottom line is way too much supply. Okay, economy slowing should bring oil prices significantly lower once again. So we will be looking, and we are short, and we'll be looking for the next breakdown. And of course, as the gold bugs continue to get pissed off at every time I write for Kitco and say that I think we're going lower, everyone's telling me how full of crap I am. But in the meantime, last week we gave you 1510 as a level, could never get above that 1510 and hold it. This week we're telling you 1500. We're staying short. Okay, to me, look, I think that you should own gold, and an investor shouldn't even look at it. Okay, but if you're trading it, to me, we're going down. We got 1480, 1460, and then 1440. But first, we got to get this through 1480. So the next target is 1480. And then if it gets through there, we'll be looking at 1460. But again, we're short. We're looking for it to go lower. And I think that and silver are both headed down. Now, again, silver's obviously a little bit of a different animal because it has consolidated more than trended lower recently. But again, I think they're both going down. I think silver will be the first to recover. And again, if you own it, I wouldn't sell it. I'm not selling mine. I mean, I own some physical. I'm not going to sell it. But again, as a trader, I'm selling it right now. I'm shorting it. It's that simple. I mean, I can only it goes back down to price. So I can only look at price. And if price tells me to sell it, that's what I'm going to do. Okay? Again, many of us try to see too many profits instead of making profit. Okay, so again, let the markets dictate to you what you should be doing. You don't dictate to the markets. Okay, and of course, the dollar, as we mentioned earlier, got pounded last week. Now, again, we were very bullish the dollar, and we just reversed the dollar on Thursday. Okay, to the short side, and again, I still think there's a good shot that it'll trade par. It is a fear asset, so that's another thing that we look at is that there may be some of the fear subsiding because of all the crap the central banks and Fed is doing, okay, or are doing. So again, right now we're shorted, but I still believe that before, the next big rush, we will still see a run at par because the dollar is also a great fear asset where people do run to park money because it is the world's reserve currency and because it is safe. So again, those are things that we continue to watch. And of course, the grain markets, had a pretty solid week. They look like they want to go up. We continue to believe they're going significantly higher. I think the fourth quarter, as I said earlier this year, is going to be big for the grains, and corn has to get over that $4 level last Sunday night. It got above it and closed below it, but again, it held support beautifully. Wheat is breaking out along with soybeans. I would expect corn to follow, and I think we're going to have a very big fourth quarter. I think there's some very good price action coming. And the meats, look, as we've talked about, we're short the hogs, which have been really wild in trade, okay? And really just trading. They're trading in about a $6 range, top to bottom. They have moved near limit almost every day. So it's kind of wild, right? Up limit, down limit. But in the meantime, look at the rectangle they're trading. They won't violate the bottom. They won't violate the top. Again, we are short them, and this will bring to us at some point, but what's happening nicely here is that the reversal point continues to fall towards us, okay? And eventually we'll get a rally that will reverse this. And again, but it may break to the downside first, but we're definitely short. But the pattern is very, very wild and very neutral right now. While cattle, both live cattle or fat cattle and feeders, continue to pound higher. Now, again, they were both down on Friday, but again, markets do not go straight up, okay? Markets have to have some pause Okay, and that's what you saw here. You're seeing, as we wrote Thursday night in our commentary for the agricultural stuff, is we said that, hey, markets should pull back from these top end resistance levels. And that's exactly what they're doing. So again, we're just looking for places to add on and buy more. I don't see any reason not to be a buyer here. I think that, again, for we're long, the algorithm's long, and based on the pattern, we should be breaking out the new highs in the next move up. And I think that's probably coming the next couple of days. So we'll continue to look for those opportunities. And of course, the big talk about the bond markets, all right, the bonds are extremely volatile. Again, I remember back in the day, the bonds, you'd be lucky if it moved 3-4 ticks a day. Now they move 30, 40, 50, 60 ticks a day. Okay, extremely volatile, wild trade, which shows you some of the panic and uneasiness on the streets that people are chasing up and down these bond markets. We are no longer inverted at the yield curve, but again, it's not a one-day event. We try to tell you that when these networks are reporting it, day to day, okay, that it's not a day-to-day event. And I assure you that it will more than likely invert again, because again, I do say, and I stand by, that we are still in the very early stages of a recession here. So I think we've got the start of earnings season here. And of course, the markets have reacted very positively. And again, as I said earlier today, okay, when you make the bar so low, okay, it's hard not to get excited about it. And when you combine that with, okay, when you combine that with people that are dying to find a place for yield, okay, again, the markets are up because of the overwhelming chase for yield, where people need to get more cash against. They need to make more on what they're investing. So what we're seeing here is that continuation of money pouring in, which again is not really a great thing. When you force investors all into one asset class, which is the U.S. equity markets, that could create a major problem. Okay, because when they decide that it's over, it's going to be ugly. Now again, we're long. Okay, so let's not think that we're talking down the market. I'm just saying that is, again, the pundits can cheer it up. All the so-called experts who profit by you being in the market will talk it up. At the end of the day, it's going up for now, and we're not going to say how long it can go up for, but at some point, it's going to be a massive failure, as it happens every time we see these bubbling type conditions, and we'll see how it plays out. In the meantime, we're not going to predict it. We're going to stay right with our algorithms, as always. In the meantime, this is Bubba's Bottom Line. I am Todd Bubba Ward. We're going to step out for a break, and I will be back with my weekly commentary. We'll be right back with more after the break. Bubba's Bottom Line. What's up, everybody? So we're talking, hedging and markets, and I think you should check out my hedging webinar next Saturday at noon Eastern time. You can get it on the website at bubbatrading.com, and if you want, I can email it to you. It will be posted tomorrow. But it will be at noon Eastern time. We'll tell you how to hedge. We'll show you some tips and tricks. And again, if you'd like to take the class, you certainly can, or you can try to use the tips and tricks I give you. But again, we believe in being in the market always, 100%, without having to worry. So I think that's something you want to take a look at. And in the meantime, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me and, of course, my commentary. Welcome back. It is Bubba's Bottom Line, Todd Bubba Ward. And of course, every week I give you a little bit of my 2 cents of what I'm pissed off about and thinking about. And of course, last Monday, the 14th, was Columbus Day. Okay. And of course, there are many out there now that want to change this to Indigenous Day, okay, without recognizing history. So what it looks like to me is that the people want to eliminate everything that has happened in history, okay? And one of the big things in life is if you don't learn from history, you are doomed to repeat it. So can we say that Christopher Columbus was a bad guy? Well, I don't know, but again, I'm sure there's some issues out there. But we can go all the way back to the beginning, okay? But so what they want to say is there was never any hatred to anybody. There was never any problems anywhere. There wasn't any slavery. Women always had the right to vote. Women always had equal rights. Okay, so they wanted to destroy all the history of this country that we've learned from for these years I mean, again, it is not perfect here. We have a lot of hatred in this country still. Okay. As a Jewish fella, okay, I went through a lot of things. Okay. So I understand what it's all about. Okay. But at the end of the day, have we not learned from history? But of course, there was no Holocaust. Okay. There was never any problems. Everything has always been perfect. So let's eliminate all of history because it's not important. It's not important to learn how not to repeat the same mistakes. But are we not repeating many of them right now with the hatred that goes on? If you wear a mega hat, I mean, is this not the same thing? But of course, we refuse to learn from history. We want to try to change it and pretend that it doesn't exist. And to me, that is the bigger sin, okay, is to try to erase something that happened because we can't go back and take it. We can only make it better going forward. But of course, those who want to make it Indigenous Day, it should be somewhere else because the United States of America was born, it's grown, it's improved, we've gotten better with everything, okay? And we've come a long way, baby. And I think we will continue to come. But of course, all this hatred involved and all this trying to manipulate history is only throwing the big monkey wrench into it and causing a lot more problems than we should be having. We should be prospering and moving forward, not worried about what happened 200 years ago. This is Bubba's Bottom Line, Todd Bubba Horowitz. And of course, it's Sunday, football Sunday. And of course, the big game. How about that Yankee game last night? What a bad break for them. But in the meantime, football Sunday, and of course, it's the Philadelphia Dallas, the Eagles versus the Cowboys. And of course, the Cowboys are favored by 3.5. We're going to take a small play on the Eagles. Okay, Dallas has just looked so bad and so awful. Again, small play, just because. And of course, we had our winner on Thursday. So we'll be back tomorrow with Bubba's Daily Update. In the meantime, have a great day, everybody. Thanks so much. We will see you back here tomorrow with Bubba's Daily Update. Have a great weekend. We'll see you later.